Welcome to the Northbound Wealth Podcast. All opinions expressed by me, my co-hosts, or my guests are solely our own opinions and do not reflect the opinions of Northbound Wealth Management. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast. Hello, everybody. This is Brent Foster in the Northbound Wealth Podcast. It has been a couple of weeks since my last release over the holidays, which was December 30th. Today is January 13th, 2025. Happy New Year. And I hope this year is an amazing year for you guys. And I am really praying that it is a really good year in the markets like we've had over the last 2 years. And with the new administration coming in about 7 days, we shall see what is implemented, and it should be pro-business and it should be pro-America. And I'm excited about that. Who knows if the markets are? The Fed sure likes to throw their weight around as far as what their concerns are. And what's funny is maybe we just climb the wall of worry, Jerome Powell. All right, so weekly market insights. Investors read inflation risk in job numbers. Stocks fell for the second consecutive week. So since the beginning of the year, it's been kind of rough, kind of choppy. And after great gains of 2024. And so here we go. So a fresh round of economic data stoked inflationary fears among investors. The data showing stronger than expected December job growth curtailed hopes for interest rate cuts this year. The Standard & Poor's 500 index declined 1.94%. The market benchmark ended Friday's session at 5,827.04, while the NASDAQ Composite Index dropped 2.34%, closing at 19,161.63. The Dow Jones Industrial Average lost 1.8%, and the MSCI EFA Index, which tracks developed overseas stock markets, slipped 0.49%. So stocks rallied broadly to start the week, but two economic reports on Tuesday, job openings and the prices paid index among service companies raised fresh inflation concerns. Higher treasury yields also put pressure on stocks. Stocks flattened out on Wednesday. Investors reacted to news that most FOMC members or Federal Open Market Committee members agreed inflation risk had increased per minutes from the Fed's December meeting. It's kind of interesting because inflation's hovering between 2.5 and 3.1% right now based on their measurements, and that's down a lot from over the last 3 years. So I don't know what they're so concerned about necessarily. U.S. stock markets were closed Thursday in observance of President Jimmy Carter's funeral. On Friday, a warmer than expected December jobs report caused investors to question whether the Fed would adjust rates in 2025. News that consumer sentiment ticked down also pushed stocks lower. There was some news out actually today around Trump and tariffs. And obviously the Fed thinks that that's going to be an inflationary pressure on the economy, but it actually might cause the Fed to maybe lower rates. Who knows? We'll see what those dynamics play out. But the Dow Jones Industrial Average on the year to date is up 0.25%. So it's basically flat. MSCI EFA is up 0.44%. And then the NASDAQ is only up 0.88% and S&P is up 0.65%. That's at the end of market close last week. This week, today, it's kind of already started down a little bit. So we're probably flat to negative on the year at the moment. 10-year Treasury note, 4.77% at the close of last week. That would be on January 10th. That is something to note because once the 10-year gets to 5%, that you usually see a stock sell-off. So we're kind of seeing it ahead of that, which is interesting. Maybe the bond market is reacting and kind of moderating, like telling us what's going to happen in the near term. In the near term, I I've last month and couple months prior at the end of last year, I was like, well, there's likely going to be a correction in the first quarter, and that'd be normal. That'd be good. So good for markets, actually, not to just go straight up. It's nice for a pullback, consolidation. Everybody kind of re-gauges, and then we can incrementally move higher over the course of the next several months into mid-year 2025. So when good news becomes bad news. So government data showed the U.S. economy added more jobs than anticipated in December, while the unemployment rate unexpectedly declined. Non-farm payrolls rose by 256,000 last month, surpassing Bloomberg's consensus estimate for an increase of 165,000. That's around 100,000 more than they thought. The unemployment rate fell to 4.1% from November's 4.2%. Analysts expected that rate to stay at 4.2%. That's the second highest monthly job gain for 2024. Unemployment ticking down to 4.1%, which is also better than anticipated. Job growth and lower unemployment signals good news for the economy, but bad news for the markets. That's just an opinion, and sometimes that's right, but not always. A stronger jobs market puts less pressure on the Fed to adjust rates, especially with inflation top of mind among investors. Inflation is a killer, so we do have to recognize that. It's really hard for everyone if inflation is high, for the most part, except the ultra rich. It doesn't impact them at all. The real estate sector was hit hardest this week, falling 4.1%, followed by a 3.1% decline in technology and a 2.7% drop in financials. Among the real estate sector's decliners, shares of BXP and Federal Realty Investment Trust, or FRT, shed 9% and 7.3% respectively. In technology, shares of On Semiconductor, or ON, fell 16% amid negative analyst actions. The company received an investment rating downgrade from Truist and price target reductions from analysts at Deutsche Bank and Goldman Sachs. Energy led gainers, rising 0.9%, followed by a 0.5% advance in healthcare and 0.1% increase in materials. The energy sector climb coincided with the rise in crude oil futures. Gainers included shares of Texas Pacific Land, or TPL, which rose 7.4% on the week, and Devon Energy, DVN, up 6.1%. Investors next week will be focused on inflation data, with the December Producer Price Index expected on Tuesday, followed by the December Consumer Price Index on Wednesday. Later in the week, December retail sales are due on Thursday, while December housing starts and building permits are set to be released on Friday, among other reports. Key economic data that we're tracking: Monday, Treasury statement. Tuesday, Producer Price Index. Fed officials Jeffrey Schmid and John Williams speak. Wednesday, CPI report. Fed officials Thomas Barkin, Neil Kashkari, John Williams, and Austin Goolsbee speak. The Fed Beige Book is released at that point. Thursday, retail sales. Import and export prices, business inventories, home builder confidence index, all that data is coming out. Then Friday, housing starts and permits, industrial production. So it's a pretty active week, along with the kickoff of Q4 earnings. So notable companies reporting earnings: JP Morgan Chase, Wells Fargo, BlackRock, Citigroup, and the Charles Schwab Corporation. Thursday, United Health Group Incorporated, Bank of America, and Morgan Stanley. So we're kind of kicking off the earnings season of Q4. So we're going to get a read and a guide. Read through Q4 2024 and then a guide for 2025. It'll be very interesting. All right, tax tip of the week. There are a few tax considerations to consider when you're working for yourself. Generally, you're required to file and pay estimated taxes during the year. Make quarterly payments if you've determined you need to use Form 11040, which is 1140 ES. Filing annually if you're If you're filing annually, you must use Schedule C to report income or loss. To file your Social Security and Medicare tax, you file Schedule SE Form 1040. Deductions. If you're using part of your home or business, you may be able to make certain deductions, such as for your office or a portion of your home square footage used for business purposes. This information is not a substitute for individualized tax advice. Please discuss your specific tax issues with a qualified tax professional. And this tip was adapted from irs.gov. All right, stay tuned for the next segment. Got a good show for you. So, about a third of 401k rollovers end up sitting in cash for over 7 years. The cost, roughly $172 billion in missed growth potential every year, according to a July 2024 report in the Wall Street Journal. Most surprising fact is that many people don't realize their rollover isn't automatically invested, especially younger savers who may be missing years of compound growth. The reality check is this: stocks have historically earned about 7.19% after inflation. Stocks are represented by the S&P 500 Composite Index, which is an unmanaged index considered representative of the overall US stock market. Index performance is not indicative of the past performance of a particular investment, and individuals can't invest directly in an index. So, but you can buy like ticker symbol SPY or VOO, for example, or IVV, which is State Street, Vanguard, and BlackRock's version of mirroring the S&P 500 index. Make sure your rollovers are not missing out on any potential opportunities. As a reminder, once you turn 73, which is a long time for quite a few people, you must take the required minimum distributions from your 401k in most cases. Withdrawals are taxed as ordinary income and may be subject to a 10% federal income tax penalty if taken before 59 and a half. And those are the disclosures. But just as a reminder, don't forget about your rollovers and money that's just there. Get it invested, get it working for you so that you can reach your financial goals and objectives, retirement, and make more money in 2025 and beyond. All right, stay tuned for the next segment. So here's an estate planning or testing 1, 2. Do you think estate management is just for the wealthy or older generations? Let's debunk that myth. So, estate management isn't about age or wealth. It's about starting to protect your wishes and loved ones. So, here's like 3 steps to consider. Healthcare directives. Unexpected events can happen at any age. A healthcare directive takes effect when you're no longer able to make your own healthcare decisions. Financial power of attorney. So designating someone to resolve your finances if you're incapacitated. It's designed to help you manage legal complications so that your affairs are handled according to your wishes. Access to accounts. In today's digital world, decide who will have access to your online accounts to prevent future challenges for loved ones. It's not just about wealth or age. It's about helping protect what matters most and preparing for the unexpected. So what can you do now? Start with the basics. Consider setting up a will, setting up healthcare directives, and assigning a financial power of attorney. Consult a professional. Consider working with a legal professional to create a strategy that fits your unique situation and can evolve as your life changes. If you have any questions or think you're too young for this conversation, let's discuss why preparation is essential regardless of age or wealth. I myself and my wife, we went through that process and we were in our late 30s. We had lost a son in 2015, and that kind of prompted us to start thinking about, what to do and what happens if something happens to us, especially when we have 2 beautiful girls. So we've gotten all that dialed in, and we'll review that every 5 years and update it as we go. Now I'm in my 40s, and it's more important than ever as we understand what lies ahead as far as our health and legacy. So I'd encourage you to do the same thing so that you have some financial peace of mind as you go through life. Stay tuned for the next segment. January is National Financial Wellness Month. How confident do you feel about your finances? When we think about financial wellness, it often centers on numbers, account balances, investment returns, and debt levels. However, true financial wellness is about more than the numbers. It's about the sense of confidence that comes from having a thoughtful strategy for today and tomorrow. Think of it like your physical health. Consider care and proactive preparations, regular check-ins and adjustments, partnering with a professional to stay on track. It's not a set it and forget it situation. It's too important. Financial wellness is an ongoing journey, and having support can make all the difference. As the new year begins, consider giving your financial health a checkup, whether that's revisiting your retirement strategy, updating your budget, or discussing your goals. Investing in your financial wellness now can lead to greater confidence in you and your family's future. So, if you have questions about that, reach out to Northbound Wealth Management. We'd be happy to help. 317-399-1107. Again, that number, 317-399-1107. Here's some encouragement for 2025. Just like photography, personal finance requires perspective, patience, and adaptability. Focus on what's important, prioritize your long-term goals like retirement, education, or building generational wealth. Capture the good times, celebrate your financial wins and milestones along the way. Develop from the negatives. So learn from market downturns and unexpected challenges, using them to refine your strategy. And if things don't work out, take another shot. Adjust and adapt. Personal finance is a continuous process, and it's never too late to make improvements. Our firm is here to help clients remain focused and flexible so that they can capture the best opportunities while navigating life's unexpected moments. Ready to take your next shot at financial success? Let's connect. You can reach me at Northbound Wealth Management, Brent Foster, 317-399-1107. Here's some personal growth strategies for 2025. Innovative New Year's resolutions, financial and personal. So here we go. It looks like New Year's resolutions are still going strong in 2025. A recent Pew survey found that about a third of Americans kicked off the year with at least one resolution, and many people actually went for multiple goals. It's especially popular with the younger crowd. The good news is most folks are sticking to their plans. Only 13% have completely thrown in the towel a month into the year. So New Year's resolutions are more popular among young people than older adults. There's a percentage who say they made it at least one New Year's resolution this year. So ages 18 to 29 made 49 resolutions. Ages 30 to 49 on average made 31 resolutions. 50 to 64, 24 resolutions. And over the age of 65, 18 resolutions. What type of resolutions do people make? Well, in 2023, the most popular ones included improving physical health. That was about 20%. And saving more money. That's about 20%. Others were exercising more. That's about 19%, eating healthier, 18%, being happy, 17%, and losing weight, 17%. Career-related resolutions were the least popular, with only 9% resolving to pursue a career goal and 7% resolving to get a new job. While traditional New Year's resolutions may last for a while, we all know they often fall by the wayside the further we get from the falling ball in Times Square. However, you may want to try these innovative strategies to help create lasting change and growth, particularly in personal finance. Here are some unique perspectives on resolutions that can help you start the new year with renewed focus and purpose. So the 12 mini resolutions approach. Instead of setting one overwhelming goal for the year, you might consider adopting the 12 mini resolutions approach, which this strategy involves setting small goals for each month of the year. By breaking down your larger objectives into manageable monthly tasks, you may be able to reduce the internal pressure you put on yourself and increase your adaptability. For example, in January, you might resolve to review your retirement account contribution strategy. In February, your goal could be to review your beneficiaries and make any necessary changes. This approach allows for flexibility and continuous progress throughout the year. And on my blog, on my website, northboundwealth.com/blog, you'll see an example of a 12-month mini financial resolution calendar. So For example, January, review retirement account contributions. February, review beneficiaries. March, check credit reports. April, check and potentially adjust your tax withholdings. May, set up a college savings strategy. June, work on long-term goals. July, evaluate recurring subscriptions, to save costs, lower your budget expenses. August, analyze auto and home insurance coverage, which, by the way, all of that's gone up since COVID. September, start year-end financial preparation. So start to plan for how you're going to be take advantage of tax situations and things like that. October, do a home energy audit. So review your utility bills and expenses. November, don't forget open enrollment. So that's like your healthcare benefits and HR stuff. December, look at annual spending versus your budget and make contributions where necessary. Make some business decisions if you're a self-employed person. So it's habit stacking for success. So habit stacking is a great technique that involves linking a new habit to an existing one. This method can be particularly effective for building positive behaviors. For example, your morning routine habit stack might look like this. Number one, after pouring my morning cup of coffee, I meditate for 60 seconds. Number two, after I meditate for 60 seconds, I will write my to-do list for the day. Number three, after I write my to-do list for the day, I will immediately begin my first task. And then a financial habit stack might be number one, as I pay my monthly bills, I will review my credit card statements. Number two, as I review my credit card statements, I can see which card has the highest interest rate. And then number three, as I determine which card has the highest interest rate, I can consider a strategy to dedicate more of my monthly budget to that bill. Habit stacking works on the theory that your current habits are already built into your brain. You have patterns and behaviors that have been strengthened over the years. By linking new habits you want to start to a cycle that is already built in your brain, you make it more likely that you'll be able to stick to that new behavior. Once you mastered this basic structure, you can create larger stacks by chaining small habits together. This technique allows you to take advantage of the natural momentum that comes from one behavior leading to the next. Leveraging technology for accountability. So technology can be a powerful ally in pursuing your resolutions in the digital age. Digital advancements have helped track personal growth. The evolution of technology and introduction of artificial intelligence, or AI, have heralded in an era of smart goal tracking systems, including an array of mobile apps that you can access right from your smartphone. These apps can help maintain your focus on objectives, aligning your actions with your goals. Technology can automate reminders, helping you keep focus on your tasks. Digital tools provide regular reminders informing you of the next step forward in pursuing your goals. For example, there are many budgeting apps that you may want to consider. Here are a few that may be of interest. So, number one, the acronym YNAB. You need a budget. YNAB. You need a budget. Overview. YNAB, which is you need a budget, is focused on proactive budgeting, helping users keep track of every dollar they earn. It might help someone who wants to track spending in real time and manage money more intentionally. Features real-time tracking of credit card spending, debt payoff ideas, and goal setting. Ideal user is someone who wants detailed control over their budget. And then platform is like iOS, Android, and web paid subscriptions. Number two, Pocket Guard. So an overview of that is Pocket Guard is designed to help users see how much disposable income they have after accounting for bills and savings goals. It connects to bank accounts and credit cards to track real-time spending. So like Rocket Money is something like that. Features, budgeting, spending insights, savings goals, and debt payoff ideas. Ideal user is someone who wants a simple way to see what's safe to spend. Platform, iOS, Android, and web. And number three, Spendee, if you've never heard of that. Overview of that is a simple user-friendly app that allows manual entry or syncing with bank accounts and credit cards. It offers an easy-to-use interface for tracking spending by category. And then the features of it are budgeting, spending tracking, and expense categorization. Ideal user is someone who wants a visually appealing, straightforward app, platform iOS, Android, and web. Number 4, good budget overview. This app uses the envelope budgeting method where you assign money to different envelopes for each spending category. It helps users stay mindful of their spending without linking to bank accounts. Kind of like Dave Ramsey, Features, envelope budgeting, spending tracking, and reports. Ideal user is someone who prefers manual entry and a simple, disciplined approach to budgeting. The platform, iOS and Android. All right. So the reverse resolution method. So instead of focusing on what to start doing, the reverse resolution method encourages you to identify habits or behaviors that you want to stop. For example, you might resolve to stop making impulse purchases or to cease procrastinating on certain financial decisions. Yeah, I think that works for some people, not everyone. The skills-based approach or the skills-based resolution approach. You may want to consider setting resolutions around acquiring new skills instead of focusing on a particular outcome. Consider exploring new subjects, taking on new challenges, or finding new ways to learn. By making learning a habit and incorporating it into your daily routine, you may be able to pursue your educational goals and continue to grow and develop over time. Staying informed about potential policy changes being discussed in Washington, D.C. That could impact your long-term financial strategy could be worthwhile. Learning resolution, setting a goal of increasing your financial knowledge may position you to ask informed questions when meeting with your financial professional. Risk management protection. So risk management is often overlooked for financial resolutions. Consider reviewing your insurance coverage every year. Additionally, you may want to explore options for dealing with extended care, which can play a role in comprehensive financial strategies, especially as you approach retirement age. While you may not need extended care services in retirement, many will. According to the Administration for Community Living, a 65-year-old has a 70% chance of needing some form of extended care. It's important to remember that Medicare does not typically cover extended care costs. So according to Genworth Financial, the estimated median cost of extended care in 2024 is $5,511 per month for assisted living. And get this, $10,025 for a private room in a nursing home. That's per month. 10 grand a month, that's $120,000 a year. It's just getting out of control. The one-word resolution strategy. So you could always consider choosing a single guiding word instead of specific resolutions for a more holistic approach to your year. This word can be a theme for your financial decisions and actions throughout the year. Words like success or grow or achievement can provide a powerful focus for your financial journey. You could do that also for your spiritual journey as well, because they're interconnected. Overall, we are here to help. Whether you implement many resolutions, focus on skill development, or adopt a guiding word for the year, the key is to remain flexible and committed to your long-term financial and personal well-being. By taking an innovative approach to your New Year's resolutions, you can set yourself up for a year of personal development and growth. You do not have to go alone when seeking your financial goals. As financial professionals here at Northbound Wealth Management, we are here to help you along your journey, not just for the year ahead, but into the future beyond that. If you would like us to review your financial goals or help you set them, please contact us and we can start the discussion. Thank you for listening to the 94th episode of the Northbound Wealth Podcast. I can't wait to meet you or work with you in the year to come in 2025. And we're really excited to share this information with you and give you tips and try to help with the personal financial journey that you are on as an individual and or family. All right. Have a great week. Have a great weekend. And hopefully we'll talk to you soon. Take care.